Real quick, we were checking up on our double Keltner channel strategy yesterday, tracking it on a few pairs. A lot of them got hammered in the morning due to the back and forth nature that happened with that initial move in the market, which I did find out why it was, by the way. There was an announcement that came out that basically said global recession predicted in 2023. So we saw like a lot of flocking to the safe havens, which happened to be the dollar. And then, as always, the market interprets the news and they're like, it's probably not as bad as we initially thought, and things recover. But we did see some pretty cool moves on the dollar yen. We got a nice back-to-back yesterday here in the dollar yen. The first one was here during our live room session. If you remember this little bad boy right here, again, breach of the upper Keltner channel inside bar with a lower low, lower close in the bottom third for our entry up here. Took that down. I'll put on our fib. Took that down to a 2.0 Fibonacci. Then we came back and fired back one more right at the end of my testing period, which is 10 o'clock. Me and Tony had a nice little battle on this. He was short dollar yen. I was long. I'm not actually long because I'm just observing this. But I said, hey, I want to be long. I want to be right in my prediction. Looking for the 2.0 and a little bit off there, the 2.0 Fibonacci extension from this swing low to this swing high as well. This one took some time, but you can see ultimately hit as well. So cool example of back-to-back winners on the dollar yen. I know we spoke about this this strategy in the Monday Q&A. My plan, because again, I don't really have an interest in day trading, and it's funny, I was speaking to a trader this morning who was, I guess he was listening to a podcast I did about active trade management, and then he was also listening to a podcast I did about staying away from your trades and how, staring at open trades will drive you crazy. So the best thing you can do is stay away. And I don't think he put together the point that for the stay away one, I was mainly talking about swing trades, right? As an active day trader, you have to be in front of your charts, right? For a swing trader, those are the ones where, first of all, your trading opportunities are going to be far and few between. Second of all, in a swing trade, you're usually not out of your trade in minutes. You're going to be out of your trade in hours to days, right? So there's no need to actively stare at your chart. Even if you're doing active trade management, right? If Bobby is trailing, even if we're talking about like an FTB strategy where you're trailing after the close of the next candle, right? How long does it take for the next candle to form on, let's say, an hourly chart? Simple question, not a trick question, I promise. I just want to hear you guys say it. How long does it take for a candle to form on an hourly chart, the next candle? Well, it takes an hour. So even if you're doing a strategy like the FTB where you trail after the next candle, you still have an hour before that next candle completes, which means you still have an hour before you can trail. So get away from your charts for the hour, come back 5 minutes beforehand, give yourself 5 minutes to kind of get settled and settle your thoughts and whatnot, but you don't need to actively stare at it. The only time you need to be actively in front of your charts if you're doing some type of active trade management on like a day trading strategy, say like at a lower time frame, let's say 15 minute and lower, because then things are moving pretty quickly. But one of the things I wanted with this strategy is I don't want to be an active day trader, right? Again, I've done that enough years of my life. It wasn't in the initial kind of trading business plan. It snuck in there when I got into coaching. And I do enjoy it, don't get me wrong, but I also like the freedom of doing whatever I want, whenever I want. And so on those golf days, and you guys know what I'm talking about, being able to be like, nothing's here, FOMC meeting minutes later, let's get out and play around or something like that. But one thing I wanted with this strategy right here is I didn't want any type of active trade management. I didn't want multiple targets. I wanted to do what we call a one in, one out approach, meaning once I'm in the trade, I've got a target, I've got a stop, I've got a one cancels the other order. And if you're not sure what that is, let me know. But basically, there is nothing more I need to do aside from check that the orders actually get executed, right? That's the only other thing. But yeah, you can kind of set it and forget it. So in a case like this with the dollar yen for our second signal, the second signal came right at 10 o'clock, which is the end of the period I'm testing. That is the longest that I would ever give myself the ability to day trade, just because I like having my late afternoons or late mornings and afternoons open. This does say 10:15, but here on NinjaTrader, it prints the time of the candle completion, not the open. So this was the 10 o'clock close candle. So you can see that this trade was right at the end of that. We ebbed and flowed. We kind of went up. We kind of went down, right? And then eventually it got completed on this candle right here, which was about 18:30 in the evening, right? So 6:30 in the evening. But there was absolutely nothing that I needed to do between that 10 o'clock and that 6:30. Why? Because the entry's already on. I'm in the trade. The stops are on. There's no trailing or anything like that. The targets are already set. So is there anything that I should be doing? Is there anything that I can be doing? No, it's complete freedom. It's, I forgot who said it, but the old infomercial thing. Set it and forget it. Now, obviously, once, let's not even say once. If this strategy ends up working, and once I give you guys all the detailed rules and we do the training course on it, as always, right, we encourage you guys to play around in the sandbox. So implement different target taking strategies. Implement trail stops, active trade management, make it your own and make it the best, right? There are many ways that you can probably make it better, but I'm trying to create this to suit myself personally from a selfish Akil standpoint. But I thought that was pretty cool that checked it late last night and, checked it in the morning just because me and Tony were talking about it, little good old trader back and forth about, hey, he's long or I'm long, he's short, let's battle and feed our egos about who's better. And then, forgot about it and then came back and boom, back-to-back profitable winners here on Dollar Yen. So cool stuff. I don't even know if Dollar Yen is going to make the cut, guys. We will see. I'm only on the second or the third pair of testing right now. But again, looking to get I'd love to get at least a 4-pair portfolio. I would say 4 to 8 for this type of strategy. And I'd love to get this thing rolling by March. But far away from that as we speak. Real quick, keeping an eye on 2 trades here for our whatever this Keltner channel strategy is going to be called. 1, Dollar Yen. You can see once again we have crossed beyond the event horizon. I've been watching too much stuff on black holes lately. We have crossed beyond the upper Keltner channel. There we go. Right, we've got a nice little rejection right here. There's a chance, we still got about 12 minutes left, but there's a chance we put in either a inside bar with our current candle or a lower low, lower close. A lower low, lower close would give us an entry, a bearish entry. An inside bar would set us up for needing a lower low, lower close on the next candle to have a bearish entry. So Dollar Yen is on the radar once again. Again, this is a non-tested pair, but it is the next one I'm going to test after I finish with Euro Yen. Speaking of Euro Yen is another one that we've crossed the great beyond. We've probed the Keltner channel with the previous candle, well, the last 2 previous candles. This would need to be an inside bar to set up a lower low, lower close. So we'll keep an eye on that as well. Aussie dollar, maybe? I wonder what Aussie dollar looks like. Just curious. Actually, I'm gonna use a different chart here. Hey, buddy. What does Aussie dollar look like on this thing? AUD, USD. Look at that. Looks like a signal on Aussie dollar would have had a few signals here. This would have been, this is a little bit early, 4:45 for me, but if you're trading this would have been a signal right here. This would have been a loser. And then this is an inside bar. This is lower low, low close. Yeah, this would be a valid short right here. So I'll put some fibs up on the Aussie dollar. We can keep an eye on this, see if this thing ends up working. So again, and I want to make sure this is a inside bar. Hold on. Our high here is 68. 85. Our high here is 68.85. Perfect. Yeah. So what I want to do here is I want to take my Fibonacci extension from my swing high to my swing low of this candle. This candle right here, this is the entry candle. And back up. The 2.0 is my target area. The stop loss, Fibonacci retracement, swing high to swing low, same swing that we took the target from. The 618 is my stop loss. So you're looking at a situation where your entry is right here. Stops are looking like that. We can make it thick a little bit. Boom. 8. Yup. Bing. And then targets are looking like this. Shoop. Make it green. And we've got ourselves a live one to track, of course. And again, I'm showing you guys this for two reasons. One, this helps me. We talked yesterday about the process of kind of demo trading, paper trading, just training your eyes to see it live. There's a big difference. I haven't looked at any of these things live, right? I've just been doing historical testing for the last month or so in different versions of it. So it really does help to train your eyes to see it live for many different reasons, because you can come across things that you may not notice, and you can kind of get used to the speed of signal as well. A few that were looking to get triggered never did get triggered, and one of them, the Aussie dollar one, look at that, giving us the absolute greatest pain in the world of coming ever so close to targets and now retracing back up. So again, we spoke about the differences between back trading and paper trading, demo trading, and eventually live trading, right? There are levels of pain you must experience. We've all been there in back testing when something misses a target by what? 1 pip, and it feels bad, but it doesn't really feel too bad, because when you're in your back testing phase, you're simply just going through number after number after number. Feels a little bit different when you're paper trading or demo trading, because now you're experiencing it live. You get to see the price action come down to your almost would-be target and then reverse. You get to feel kind of the excitement of, oh man, everything I spent hours working on is coming close to working, and then it goes against you. And then the real pain comes when you're doing it live, when there's actually something at stake. So I get the comment a lot about people saying, well, there's no point of demo trading, right? Because you can't feel what it actually feels like to be involved in a winning trade or being involved in a losing trade and deal with all those type of emotional and psychological issues. And that's 100% true, right? There's nothing you can do that will replicate the feeling and the pressure of trading live. But that doesn't mean that you can't prep yourself as much as possible. Again, going back to your sports references, right? Why do teams practice? Do teams practice because it's going to feel exactly the same as a game? Is practice speed the same as game speed? Is practice pressure the same as game pressure? No, it's not. But it's the best you can do to prepare yourself. And the more you can prepare yourself, or the better you prepare yourself in a practice situation. And sometimes in a practice situation, you're purposely putting pressure on yourself. So I remember in football, we've had things where it's like, hey, if this field goal kicker misses the kick at the end of practice, the whole team has to run a lap. And I tell you what, I ain't trying to run a lap because some kicker missed a kick. So that kicker feels the pressure. Is it the same as making a game-winning kick in real life? No, it's not. But we're trying to simulate it as closely as possible. That way, when it does come down to doing it in real life, at least he has a little bit of a feel of what he should expect. And we're doing the same thing with our paper trading and our demo trading. Although this doesn't hurt because there's nothing at stake here. I'm just watching it. There's no money being made or lost. It's not going to feel the same, but I am going to feel a little bit more here than simply just going through back testing results and having this be one of whatever 100 trades I plan on taking for the day. So that stage is important. We don't want to necessarily overlook it.